Hey, welcome back. I want to talk a little bit about trading versus investing and how to tell the difference between a trade and an investment. Quite often people get the two confused, and frankly, quite often it's hard to tell. Um, so what I like to look for with an investment is just a good, solid company that's been around and has had a nice rising uptrend for a good amount of time. I feel so much safer investing in a company like something like Google here. You know, look at this 15-year chart. Nice rising trend. It's great to look for opportunities to get in. The COVID crash here was just a great opportunity for a lot of stocks. So if you can get a hold of an opportunity, a time of temporary weakness, when the stock's just beaten down, a lot of people are panicking, thinking that selling it's the right thing to do. With a great company like this, it's really an opportunity. So Facebook, it's a nice chart coming back down to the trend line here. And you see how we stayed above trend here for quite a while. Sometimes these trend lines need to be redrawn as charts evolve. So, and just because it's held the trend line for this long doesn't necessarily mean it will continue to, but we're going to look for it to hold this trend line here. And but the difference between a trade and investment, see, this investment's been pretty stagnant for the last few months, so a lot of traders are just not even interested in this. It's not fast money, um, but to me, it's much safer than some of the things that are going on with some of these trades. Um, a lot of people piled into Gevo and thinking it was a really great investment, but the thing is, it just went up too far too fast. And if you look at the company's metrics or fundamentals, of course, we're speculating that they're going to start being profitable, um, but the metrics aren't really all that great. Um, I've seen worse, but net profit margin over here is minus 243%. Price to projected sales. Stock's trading for 239 times projected sales. So there's a lot of speculation going on with some of these, and I think that it just went too far too fast. So if you're in a stock and you see has gone from $1.50 to $13, $14 like this in just a couple months, you're probably better off trading it. And as I mentioned before, with the Ichimoku system, is you can follow the trend. You follow the trend and look for price to stay above your moving averages here. Mainly this red Kijun-sen line. And we came down and tested it a couple times. So here was your early warning signal to get out of the trade. And then of course now a break below the cloud. This could even out in time. I like to look for a nice even trend to develop. So this is not a nice even trend. This is a big jump up. And then also when I look at a 15-year chart of this, there's a big difference between this and Facebook or Google charts we were just looking at. So I think a move like this deserves to be sold. And now in time it could come down and begin another uptrend and start establishing a new trend. But new trends don't just happen in this steep of a fashion and just keep going and going. No, I think people that think it's going to are dreaming. So quite often you'll get into an investment that the momentum is just crazy, and If you've got 5, 6, 800% gains in that short of amount of time, I would take them. I would trade it. I would stand back and watch it. No need to be greedy or. It's another one here. These are electric vehicle related stocks, and that sector has just gone crazy. So this thing jumped up from a $1.30 stock to an $8 stock. Oh, it's about a 700% pop. You take a look at this pattern here and how it makes these stair steps and the distance, okay? And it gets over around here. When it starts making these stair steps, the market wants to see that continue. So it starts going too long, we don't see the next step. And also another thing I'm seeing is we reached this high right here and we just couldn't do it again. We tried twice, we're not getting another stair step, boom, we're gonna bail. Now, I don't know how far down this will go, but I would definitely be out of it right here. If you want to look for momentum to turn around, so this is a big momentum sell-off here. If you're looking to get into something like this, let's say you're looking at this chart and you think it's a great thing to invest in because of this huge jump and increase in volume. A lot more volume in this stock here than there was in the past. Then you need to watch for this downward momentum to turn around. Now, you don't want to try to catch a falling knife. And as I like to say, you don't want to be a bottom picker. We don't want to talk about what happens to those people. So one way you can closely watch the downward momentum is on a 30-minute chart. And quite often, price will come up and test your Kijun-sen or your cloud and get rejected. Early signs of a turnaround would be price back up on top of the cloud, and the cloud begins to twist and turn green. What I see here is the cloud's just getting thicker. So with this bounce here, so the cloud is based on price action is projected forward 26 time periods. So with this little bit of bounce here, that's going to start changing the shape of the cloud. But there's no need to try to jump in on a trade like this when it still has all this resistance above it. And the 30-minute time frame is really the least reliable as far as how price will react to the cloud. Your higher time frames are more reliable. And this is far, far from resuming an uptrend here. And we're definitely oversold. You can see how far away we are from the cloud here. The further you are from the cloud, the more oversold you are, or overbought, either direction. So like I say, try to recognize the difference between a trade and an investment. A lot of people think NIO is a great company to invest in, and it may be. I'm skeptical because when I see this kind of momentum from $5 to $65, there's just no way that can continue. There's too many greedy people with big profits that want to get their money, and I think there's a lot of speculation about forward earnings and potential because, you know, when we look at the metrics for this company, forward price to earning is negative 96, so the company's not even profitable. Earnings per share growth year on year, 56.3%. Sales growth was up 133%, so that sparked a lot of interest when they're up. Their sales growth is up. But still, I mean, these metrics to me just aren't really deserving of being up over 1,000% like this. So these things ran for quite a while. I was really surprised. So I think if you manage to get in on one of these, when you see signs of trouble like this, then it's time to take some profits, stand back, and watch and see what it does. This thing could retrace quite a ways. 15-year chart here. I don't think it goes back that far. It only goes back to September 2019. So, like I say, this steep of a trend can tend to turn into a trade. But that's up to you. This is my opinion. This is how I handle these things. I didn't get in on this because I just felt that the momentum for the fundamentals and everything was just ridiculous. So I missed out on that. I mainly invest in good solid companies like Costco or Google. So Costco's taken a bit of a hit here, but I hold it. I plan on owning it for a good long time because when you look at a chart over a good long time, that is a beautiful chart. A lot of times it's safer to grow investment capital slowly and safely. This is a much more manageable trend. Trend lines can be broken, of course. And we're coming back down to the trend line here. I'm actually thinking about buying a little bit more. I think the market's seeing this out of favor because now we have a resolution to COVID. And so they're thinking, well, people aren't going to be buying as many groceries. But, Costco is crazy busy all the time. I think it's a great company. This is temporary weakness right here. Temporary weakness. This peak up here was a lot of hype with COVID. People were rushing in. Oh yeah, people are buying groceries. So I think this is a buy opportunity. Add a little bit more. And another thing, a lot of traders, people with small accounts, they're not interested in this because they can only afford 1 or 2 shares, and it's not like you're gonna be making those 1,000% gains. So trading can be beneficial to growing your account if it's done right. You just got to be really careful with it, and it definitely helps to have the proper tools and knowledge. I think people that are trading with smartphones and Robinhood are at a big disadvantage. A lot of them don't know what they're doing. They don't have access to good charting, good indicators, a nice big chart on a desktop PC where you can really see what's going on. I think is critical. So this trade just came up on my radar here. This Vector Acquisition Corp, VACQ. You can Google the ticker symbol and Google why is VACQ going higher. And I think the story's pretty interesting. I'm not going to get all into the story right now. You can Google that if you'd like, but this could be an interesting trade here. All of a sudden, a lot of volumes come into the stock. We jumped way up, came back down. This is why you don't just jump in on the first day. And momentum is really dangerous. So I was just looking at this on a lower time frame. So on a 4-minute chart, we got some resistance right here. You see it with the flat. We're getting a big steep cloud, high momentum. We got the Kijun-sen line flattening out here and this flat part of the cloud. So this is a resistance area. Now if we look on that on the 30-minute chart, the resistance turns into the cloud. But the thing about the cloud, the price is coming right here at a very thin area of the cloud where it twists. And quite often this is a pretty easy area for price to break through. And with that huge jump in volume and interest coming into this, and I've seen something else interesting here. You see the Tenkan-sen line? Price has gotten back above the Tenkan-sen, and we've crossed the Kijun-sen. So this is our TK cross. This can be a good place to base a trade. So now, let's say we trade this. We enter this trade, and we're going to look for Tenkan-sen to stay above Kijun-sen, or of course we're going to look to break above the cloud here. So I'm kind of liking the way this looks as far as just a trade, a possible momentum trade. It's risky, so I just use a small account to trade. I have my larger accounts for my investments, stuff like Costco and Google. And this just came up on my radar in one of the discussion groups, and it kind of sounded interesting. And I like this little TK cross right here. See up here we crossed down after the big jump, and now we're crossing back up. And if that's anything like a Jivo, or let's see, where's a 4-hour chart? Of course, we're looking at a 30-minute chart on that. But you get this TK cross, and things can run for quite a ways. So we would use the 30-minute chart. We'd use a 30-minute chart to get into the trade based on this. So this is fast momentum. 30-minute chart is fast momentum. So we're looking for a fast momentum trade on this. And once we're into the trade and we start pulling away from this cloud, if that be the case, we might want to go to a 4-hour chart and start looking at where we are in relation to the cloud, the Kijun-sen, and the Tenkan-sen. If we see a nice trend forming. So this could eventually turn into an investment, but right now I just see it as a trade. So anyway, I think that's good for this video, and I'll have another video up here soon. I'm probably going to do a tutorial video on my my Schwab platform here, and some of the ways you can lay it out and things you can do with it. So I'm going to sign off for now.